Hey everyone, and welcome back to the Tesla Stock Podcast. This week, Elon Musk became the first person in history to achieve a net worth of over $500 billion, a stunning milestone fueled by a relentless rally in Tesla stock. But as the stock parties like its 2021, a critical delivery report is just hours away that could bring the market crashing back down to the reality of the car business. With the stock now trading around the $467 mark, we have to talk about the peak euphoria and the fundamental test that lies just ahead. Our top story is the incredible milestone that perfectly captures the current mood around Tesla. On Wednesday, Elon Musk's net worth briefly crossed the $500 billion mark, making him the first person ever to do so. This astronomical number is the result of a powerful surge in the value of Tesla stock, which is up over 30% in September alone, as well as rising valuations for his private companies like SpaceX and xAI. This milestone is the culmination of a narrative shift that has taken hold in recent months. Investors have welcomed the perception that Musk is now focusing more of his time on his companies rather than politics. The board's proposal of a new, potentially trillion-dollar pay package, and Musk's own recent $1 billion open market stock purchase have all been seen as massive votes of confidence. The stock is now trading near its all-time highs from late 2024. And for the bulls, the sky is the limit. But while the stock price is celebrating, the company's actual business is about to face a major reality check. Our second story is the upcoming third-quarter delivery report, which is set to be released this Thursday. While this is expected to be Tesla's strongest quarter of the year, the numbers are deeply complicated. The Wall Street consensus is for Tesla to report about 441,500 deliveries. That would be a roughly 6% decline compared to the 463,000 vehicles they delivered in the same quarter last year. So, why has this been a strong quarter? The answer is a one-time sugar high from a massive pull forward of demand in the United States. Buyers have been rushing to get their orders in before the $7,500 federal EV tax credit expired at the end of September. Analysts widely agree that this has simply accelerated purchases that would have happened later, rather than creating new demand. This sets the stage for a very difficult fourth quarter, with a potential demand gap in the U.S. In fact, on the last earnings call, Elon Musk himself cautioned that Tesla faces a few rough quarters ahead. Add to this the ongoing weakness in Europe, which remains a sore point, and the fundamental picture for the car business looks challenging, to say the least. So, if Elon Musk's personal wealth is hitting record highs, but the company's car deliveries are expected to be down year over year, what is going on? That brings us to our final story, the great disconnect. The market is no longer valuing Tesla as a car company. The stock's massive 30% rally in September has been driven almost entirely by a powerful narrative shift, with Wall Street and investors leaning into the possibility that Elon Musk can reposition the company as more than an automaker. The focus is now squarely on the future potential of artificial intelligence, humanoid robots, and a fleet of self-driving taxis. This narrative has been fueled by a wave of bullish analyst upgrades. Wedbush, for example, raised its price target to $600, citing what it calls Tesla's next stage of its AI autonomous path. This has created a situation where, as one analyst put it, the valuation rests heavily on momentum and enthusiasm for this next chapter. Some, like longtime investor Ross Gerber, have argued that the core auto business is only worth about $150 a share, with the rest of the stock price reflecting these AI ambitions. This is the ultimate tug-of-war for investors. Do you value the company based on its current and potentially shrinking earnings from a challenging auto business? Or do you value it based on a highly speculative but potentially enormous future as an AI platform? Right now, The AI story is winning, and it's not even close. So, to sum it all up, Elon Musk's personal wealth has hit a record $500 billion, a powerful symbol of the market's incredible optimism and the stock's recent surge. That optimism is about to be tested by a third-quarter delivery report this Thursday that is widely expected to show a year-over-year decline, propped up by a one-time demand pull forward in the U.S. And the reason for this massive disconnect is that Wall Street has fully embraced the narrative of Tesla as a future AI powerhouse and is, for the moment, largely ignoring the current struggles and headwinds of its core car business. So, the delivery numbers are coming out on Thursday. My question for you is this. Do you think a miss on deliveries or weak guidance for the fourth quarter will finally be enough to break this AI fever dream and cause a correction in the stock? Or has the narrative shifted so completely that the car sales numbers simply don't matter anymore to the market? Let me know what you're expecting to happen in the comments below. As always, if you found this breakdown valuable, please hit that like button, subscribe to the Tesla Stock Podcast, and be sure to turn on notifications so you never miss an update. Thanks for listening, and we'll see you next time.